Time to see what's on the radar for Lenka Martinek, managing partner at Sustainable Market Strategies in Nordis Capital. And we're going to talk about why temporary employment companies are showing up. Lenka, what are you liking about them, and any concerns?
Well, actually, there's not much to like about them, unfortunately, at this juncture. I think that for me, the reason why I wanted to flash this group of companies is actually as a bellwether for the overall employment backdrop. So again, let's take a step back a little bit. Big picture, of course, the U.S. employment number is probably the most important macro piece of data, monthly data for a lot of investors. And over the last couple of months, of course, we've had questions about the quality of the data because of the shutdown in the U.S. at the end of 2025. A lot of cross currents, again, coming back to the AI story. What are long-term layoffs versus what are the disruptions in the market? And so one of the areas that as a macro investor that I've always looked at is the signal that comes from the temporary employment sector. Because if we think about the jobs market, it tends to be the temporary layoffs and hires and fires that tend to happen quickest. And so we get a very, very quick signal from the temporary employment industry before you tend to hire or fire people on a temporary basis before you go through the long-term, the more costly long-term adjustment. And so if you just look at the overall, the official data, you always get kind of a turn in the cycle from the temporary sector before the broad one. And so then you can look at, the companies that are even more reactive. So the actual temp employment companies, what are they saying? How are their stock prices performing? And I think it's an important extra information on trying to understand what the U.S. job market is actually going through in real time. And so I think you might have the charts there for some of these companies. So think like Manpower, Adecco, Robert Half. These companies have been in a really strong bear market for quite some time. So basically, the stocks have done poorly for the last couple of years, and essentially we're seeing this sort of reflecting only now in really poor employment data from the U.S. And so these stocks are on my radar because I look at them as a bellwether for the overall growth or health of the U.S. employment sector, and I think that the message that we're receiving, whether it's through the earnings reports or through the actual stock price, is that there are some fundamentally difficult it's a fundamentally difficult backdrop for the labor market in the U.S., which of course is highly important for the next couple of Fed meetings for sure, as we're in this environment where we potentially will have more pass through from oil prices into inflation. And so I think it's a great indicator to look at for investors who want to have a second kind of view about what the employment market is like.
And does it show up as a bellwether for AI as well, and the impact AI is having, or a lot of these temporary employment jobs, actual physical jobs that can't really be replaced with AI?
No, not the case necessarily. A lot of these companies have different parts of their businesses, and so they're going to have, as you mentioned, sort of maybe, the physical jobs or blue collar jobs that are more difficult to replace by AI. But you also have an awful lot of service jobs, whether it be executive searches and this type of thing, and also a lot of white collar, office jobs, which very much we know now can very much be replaced by AI. And so when you look through the earnings reports of all of these companies, there has become, it's just fascinating. And, none of these companies were reporting on AI 18 to 24 months ago. And now all of them in the Q&A section, there is always questions about what is AI doing to your business? How are you able to integrate AI, but also what is the job destruction that is coming from it? And it is definitely apparent in the earnings comments that some sectors that, at this point you would expect to be stronger have been notably weak. And so, as I mentioned, the white collar, the sort of office jobs that can be, companies are just a little bit quicker to fire or to lay off, and not nearly as likely to enter into longer term contracts. And so you see this sort of uncertainty that's being built into labor markets as a result of how companies are thinking about how AI will change certain jobs.